Hi everyone. In today's video, we will cover the key tax changes which are applicable from 1st April 2023. This is a new tax regime. Till last year, it also existed, but it was an option which was given to select from. It was not the default option. From 1st April this year, it is the default option. And if you want to choose the old tax regime or the old tax rates, you need to specifically choose. Otherwise, the new tax becomes applicable. Uh, I'm not intending to go into differences between what is old versus new because that has a lot has been written already about it. I just wanted to let you know how you could quickly make a decision about what works for you, right? So I'll share my screen and help you understand the details where you could actually identify more information and how you could quickly arrive at what option works for you. So you could go to my blog site insight.banyanfa.com. Here, click on India Budget 2023 post. Here we have written about the key change which was announced in Budget 2023 in the month of February. And specifically, let me come across where new tax is talked about more here in this post. On the new tax regime was also there last year, but the tax slabs are a little bit more granular. They have actually consolidated a bit more. The 30% tax slab kicks at 30% at 15 lakhs plus. So how to know whether old is better or new is better? First of all, important thing to understand is that in new tax regime, the government is giving you higher exemption slabs, but in order to give those slabs, they are also taking away lots of exemptions. So the key decision factor whether old is better or new is better, you need to identify how much exemptions are you able to claim in a financial year. So here there was one brilliant kind of one pager slide which CA Nitish had taken across and which I thought to kind of use over here as well. Uh, what it says is that whatever is your income level up to 15 lakhs, these are the level of exemptions. If your exemptions are higher than the numbers which are mentioned here, you are better to be with old tax regime. Else you stick with the new tax regime. Example, if your income is 10 lakhs and your exemption is, let's say, 2 lakh rupees, because you don't have many places to kind of claim exemptions, then new tax is better for you. Else you go with the old tax. Uh, if your overall exemptions are more than 3.75, you are better off, irrespective of whatever income level you are in, to go with the new with the old tax regimes. To help you even specifically understand how the implications of how much will be the tax implication, we have over here uploaded a tax calculator. It is not a very granular tax calculator. It does not include very specific nuances associated with tax calculation, but it will give you some rough idea that if you are a salaried employee, if you have HRA and what kind of deductions you have, whether new is better or old is better. Let me give you a walkthrough of it. When you click over here and click download, this sheet will download in a browser. It will look like this. The old tax regime details are here and the new tax regimes are here. You have to just fill the yellow sections. So what example we have taken over here? Let's say your income is 10 lakh rupees. The standard deduction available is 50. The HRA exemption which is available in case you live on rent is 1 lakh rupees. Please be mindful. This is not HRA allowance provided by your employer. The actual HRA deduction is little bit lower than what your allowance provided by your employer. So you'll have to go into a specific calculation of how much HRA is exempted for you. Here we are using the HRA exemption. So you would see as per the old tax regime, the gross salary gets reduced to 8.5 lakhs, 10 lakhs reduced to 8.5 lakhs. Then assuming there are other incomes as well, let's say 3 lakhs over here. So their total gross income goes to 11.5 lakhs in old tax regime. There are other exemptions a person might be having, let's say investing in PF, PPF, insurance policies, school fees, principal payment of your home loans and whatnot. So that place comes under ATC, your medical insurance deduction. There could be other elements as well. Whatever it is, you keep on entering them. The total of your deductions under these would be coming over here. The old tax so gives credit to all the exemptions. New tax takes away most of those credits. So what you would see at 10 lakhs, considering these exemptions, the taxable income is 9.75, while then for the new tax, the taxable income is 13.5. The actual tax outflow as per new tax is higher. It at 1.24 lakhs versus 1.1 lakh for old tax regime. Now, if we go back to that sheet and refer to these rule of thumb exemptions, at 10 lakhs, the exemption figure was 2.65 lakhs, beyond which the old tax was beneficial. Let's see the situation over here. So the total exemption which we are trying to claim is 1.5 lakhs here and another 1.75 here. So it's around 3.25. That's why the old tax is looking more lucrative. For example, if I take this away and say there's no HR exemption, you would see that the total exemption falls to 1.75, which means the old tax is now is inviting more tax versus the new tax. So you could play around with these figures and see how it works for you. Based upon that, you could choose to stay with old tax regime or new tax regime. You need to mind one thing, that you need to tell your employer that you're going to apply for old tax regime. Otherwise, they would by default consider new tax and will start deducting TDS from your salaries based upon that the new tax regime is the default option. If you are a salaried employee, the tax regime allows you to change between old and new each year. So this year you might consider new is better, next year you might go for old and keep on swapping year on year. But this benefit is not available for other people. If you're not a salaried employee, you can only make this choice once. So please make a conscious decision. Compute your income, see how you would fare between old versus new. Also, you need to be conscious that the writing looks like on the wall. Most of the exemption and the new tax regimes are going away. There are certain which are still providing for, which may also go away as well as things move across. So my suggestion would be, please do not commit yourself to any long-term investments considering the taxation element to it. Please select a product purely based upon the merit of that product rather than the tax which may come across. Because if in future the tax goes away, you might be left with a product for which there would be no tax benefit and you might not have a happy situation to be in. Purely consider the merit of it and then get into it. Assume that there's no tax so that you don't get penalized later when the tax regime changes. So with that, I would again recommend, if you need any clarifications, you could go back to this blog site. You could contact us again, and please do inform your employers at the earliest so that you are choosing the right option rather than the default option. Thank you so much. Have a good day.